Stop. Lay down. Sit. All right, good morning, everyone. Oops. Here. Boom. Boom. There we go. Sorry. It's one of those mornings. I had the boys last night. They stayed with me just because we had late practice. And yeah, forgot to bring their lunches. So as soon as I finish up here, I have to run, bring their lunches to school. Melissa's like, did you forget to pack their lunch? I was like, yeah. Yep. Again, on my mornings, no problem. We got a schedule. But today, everybody was completely thrown off. So yeah, she's like, you guys and your ADD brains. I'm like, yeah, sometimes it is real. Today's one of those mornings. So yeah, I'm all over the place. But check out the headline we just got. Kashkari, not seeing evidence that underlying inflation has peaked. That's always great. Messer says the U.S. is in an unacceptably high inflation environment. Yep. Ukraine, the EU, agrees to the 8th package of sanctions against Russia. Kind of getting laughable at this point. Yeah. Kind of funny. So if you guys kind of want a little bit of a laugh, it's interesting to get in there and read this one. Reason why is because they are banning exports of coal to Russia. And I was like, what? You're banning exports of coal to Russia. Russia is, I believe now, they were like the 5th or 6th largest supplier to India. I think they actually are higher than that now. They've taken it over. So they actually have a lot of coal. So I was kind of curious on that one. I guess it's called coal coke or something like that. It's an industrial thing, but yeah. But Russia actually exports lots of coal. So banning exports from the EU to Russia, I thought was kind of funny. And they said they're going to do the energy cap, right? But I love the energy cap. We're not going to pay you, but we're going to try to not disrupt global supply. And yeah, because we're not fueling the war engine, which I thought was funny. Actually, where is it? This one, we're going to implement it, right? We're not going to pay more than that. It's like, okay, well, you don't get it. I mean, whatever, right? But it's funny, okay? But it's going to allow European operators to undertake and support the transport of Russian oil to third countries, provided its price remains under the price cap. So you can still trade it through other countries, I guess. It's going to reduce the revenue. It's like, okay, sure, right? We're not going to put it in until December. So again, they get to stock up even more. But I like this one. Where is it? While keeping global energy markets stable through continued supplies, right? It also thus address inflation and keep energy costs stable. And the oil folks are like, sure, right? This was the response. Mm-hmm. Yeah, go ahead. Keep stacking it in there. Yeah, I think they're a little delusional. Again, Russia, Iran, all the bad countries, right, that are out there. They're all like OPEC plus people. And they're like, okay, fine. Keep putting a price cap. We'll just keep making it higher. We're not going to sell it for cheaper than what we can get on the open market with it. And there's plenty of countries that would love to buy it. And you're like, we're only going to pay this? Okay, you don't get it. Again, capitalism. That's capitalism. So, yeah. Also, Sweden investigating the Russian pipelines. And there was some explosions. They're not saying who did it, right? And it's kind of one of those ones. It's like, oh, did Russia do it? Did Russia do it? We found evidence of, extensive damage. Okay. I mean, did Russia do it to hurt themselves because they can't sell it now? Right? Were they sabotaged by somebody else? And then again, you guys know how I absolutely love my comments. Water is wet. I love it. It's awesome. Favorite part of the morning is really looking at all the comments. So, right now, rather tame. We saw unemployment claims actually much higher than expected. Now, I want to say much higher, but the last forecast was 190. The forecast at 205 came in at 219. So showing that, again, some of the data out there is kind of like, and again, unemployment claims starting to rise, right? Which it should, but it's not so much the demand right now. Again, something like this, seeing that, listen, the underlying, we were seeing almost no evidence that inflation has peaked. Not what you want to hear, right? I'm not comfortable saying that we're going to pause until we see evidence that underlying inflation is cooling. We're quite a ways away from a pause. So we talked about maybe 0.75 and then pause. And yeah, right now, there's no pause, right? again, not necessarily the fastest group. And then again, here's the Messer data as well, right? Dire scenario, stated pandemic, policy needed higher frequency data. Yep. Key to identify the turning point of inflation. So a lot of people are, some of the big names out there are like, yeah, inflation has peaked. But then, the big people that are making the calls are saying, haven't seen it yet. Not quite there. Yeah. So besides that, everything right now is, again, we'll get some, again, we have the Ivy for CAD coming in. We have Mackin speaking 11:35, again, strange time, but that's when Mackin is speaking at a current economic situation. Again, that will probably be this has the ability to be a market mover for the CAD. And then we have, obviously, Waller, Messer speaking. We're already starting to see those now. So I think today is really about preparation for tomorrow morning. We know that 8:30 non-farm, typically is traditionally considered one of the largest releases that exists. Now I would say that it's more FOMC only because we're in such kind of a crazy interest rate raising environment. That's going to take precedence right now over kind of just a non-farm number. Will it stay like that forever? Nah, it'll cycle back again. I mean, it's just, it's just kind of where we're at right now. Doesn't mean that this is a permanent kind of change, but the non-farm number is important because obviously demand and jobs is kind of what is on the forefront of everybody's minds right now. So the market probably going to prepare. Right now, you can see in the last 24 hours, a lot of currencies you're seeing that, that the top two figures are one color and the bottom is a different. You can see that here, you're seeing that here. You're seeing the switch. And again, none of the numbers are really kind of earth-shatteringly large. 11, 18, 19, 19, 28, 46. Again, pound has its own problems. Euro pound up another 10. And not that it has its problems, but it's retracing after kind of a lot of craziness that we saw for a couple days. And even the pound yen down 43, not really that much, right? So a lot of this is in preparation for tomorrow. Big things to look for tomorrow is one, the average hourly earnings. We know that the earnings have not kept up with inflation, and that's where the problem is coming from. The non-farm change, obviously this is a big one, supposed to be less than last time. This is one that we actually kind of want to see pick up a little bit. And then remember, the Fed is saying when we see demand destruction, we should have the unemployment rate around 4.6. We jumped little last time, right? We went up from that 3.5 to 3.7. Question is, again, that was such a big surprise jump. Will this go down? If this goes down, markets are going to get smoked tomorrow. Okay. I love this. Could non-farm payrolls print be bad? Well, it depends. It's going to be a bad as good scenario, right? If it looks great, markets are getting smoked. Where normally you would see a great non-farm and you're like, awesome day for the markets. But right now it just means that they're going to, So I think here is going to be the big problem. If it holds at 3.7, I think we're, again, we're okay. If there's any adjustment back again, I think it's going to be a rough day for the markets. Hearing the comments right now, and again, none of these are necessarily big market movers, but again, Kashkari is seeing something. The fact that he's saying we're not seeing evidence that it has peaked yet, the fact he's like, but we are seeing almost no evidence. That's, yeah. Because I highly doubt, somebody else is going to come out and be like, what, we're seeing so much evidence that it's peaked. Because, again, seeing almost no evidence is kind of, that's pretty bold. That's pretty bold. So, again, I think pretty much we're guaranteed 0.75. And the big question was where we're going to pause, and it doesn't look like it. So, again, the non-farm numbers tomorrow are just going to be another additional drop in the hat of kind of where it goes. Again, this drops to 3.6. No pause. Absolutely. Markets are getting smoked. Average hourly earnings, same thing. Non-farm change. It's expected to be much less than before, right? And again, if you look at the the data here, right? The ADP number, again, they do 1 out of every 3 paychecks or something ridiculous like that, right? This was not only an adjustment from prior, but also here. So if ADP is any foreshadow of what we could see with regular non-farm, this comes in higher than expected, 300. Yeah, another whole kind of like just whip to the back, right, of the markets. So today, what I expect to be a little bit slower, just in preparation for all that fun and craziness for tomorrow. And as I said, non-farm, even right now, it's probably not number 1, but it is absolutely a close number 2 right behind. Where you're just, we're kind of just worried about kind of what's next. What's the next drop in the hat that we need to worry about? All right. But again, still seeing things like this that, it's unacceptably high. Yes, we all agree. We all hate it. And what's scary is It's unacceptably high. No, no underlining. Nothing is showing us we've peaked, and yet we have oil back up into the 88 range already, with supply being cut greater than expected. Right? So it's kind of like, wow, we're going to keep raising. I mean, even more reason to go into recession, but normally a recession, you would think this is bad. They pull it down, but OPEC is trying to get ahead of it all before the crash, right? And they're just jacking it higher, higher, higher. So higher oil and higher interest rates, yeah, it's not necessarily the scenario you want to go into the holiday season, right? So yeah. All right, so VIX. VIX is, I would say, kind of holding. Yesterday, it did kind of take a drop down, and now we're seeing it a little bit. It is green, not by much. I mean, it's up just a little bit from where we were, and it's one of those rare days where the VIX is green and all the indices are green as well. Question is now, I mean, seeing the headlines, is this just preparing us for what's coming, right? And it's not like any of them are super, crazy in the green. I mean, the biggest one is 0.6 for NQ, and that's kind of been beat up more than the others. So right now, with it being flat, again, we got some speeches later today. Wouldn't necessarily, I wouldn't be surprised if we do go down a little bit and then start to raise up. Just kind of, maybe not to this extent here. Maybe not this whipsawly, but maybe something more along the lines of like this, like a slow increase, right? In preparation for tomorrow, because it's going to be a big number. I mean, everybody's looking at it, knowing what's coming tomorrow. Again, non-farm is not the main gauge for inflation, but it is one of the big things. Again, that destruction. The dollar also creeping back up. Now, the dollar had some craziness here, right? Late last night, we had the gap down in the market, then a little spike up, all the way back down again, and then kind of back over. So, yeah, a little craziness right there. A little craziness in the markets. And again, some of that had to do with the interest rate last night. New Zealand is up to 3.5 now, so they are officially in the, in the big spot, in the big boy spot. Let's see. I'm sorry, that was here. Sorry. That was Tuesday. Yeah, yesterday was Wednesday. Yeah, so 2 nights ago. And again, you can see there's nothing really there, kind of changes around. So again, dollar moving, right? Dollar moving back up again. Back up in that 111. We're right near that 112. Looking at this one, again, we're not trading the Dixie by itself, but that's kind of what we're looking at. You can see that we have an area here. It was an old area that we talked about, kind of that Harry Potter. And you can see, look, we hit it again, hit it again, hit it again. So right now we're kind of clear up to this 1242 range. And I'm okay with this. I think today, right now, in preparation, I mean, everybody thinks the number's going to be bad tomorrow. With this kind of rallying up, kind of makes sense, right? If we can get into the area sellers here, all that data comes out and the dollar kind of gets weak really, really quick. Because again, everybody that sees the non-farm number thinks it's great, goes, oh, that's long dollar. Well, if the dollar runs up beforehand, what it's trying to do is play those people. When they go long, it'll stop them out. And then when we tag all the stop losses, that's where it'll move. So it's kind of a little bit of a fake out there for news. So I would expect, again, some dollar strength today. If we do get dollar weakness, I don't think we roll much lower than 111. I think that prepares and kind of like, for lack of a better word, loading the gun for tomorrow morning for a big non-farm number. But again, dollar, we're kind of in the same range. I mean, yesterday we were sitting, here's the 1030 candle right here. We're just slightly higher than we were yesterday, okay? Commodities kind of flipped. Again, you can see that gold and silver kind of in the red again. Commodities, as far as energy, they're both up, right? 0.15, and we've been up in oil the last couple days. Natural gas also starting to increase. Back up into that 7 range. I was like, oh, can we break 6? I think we had, 625 is where our downward target was, and went to 630. We missed it, and now we're back over 7. So not the direction that you want to see. Hello, buddy. It is what it is. Everybody wants energy costs cheaper. This is not the direction we want, but it's kind of making sense. I think you could put whatever sanction you want on Russia. I don't think necessarily at this point. I don't think any sanction we could put on is going to hurt Russia any worse than they're already being hurt. But it's nice lip service, and again, remember everything is cause and effect. So, you put a harder screw to them, they're going to put a harder screw back. And there was actually, I forget who it was. And again, I keep doing this, but there was a guy yesterday on CNBC talking about it, talking about how right now with, the supplies and things, if it becomes much more of a cold winter, then yes, it could cause a problem. But right now, if there's no major changes in weather, we're okay this year. Not us, but Europe is okay this year for natural gas. because again, they already had some supply built up before all the whole Ukrainian war and what was left over from last year. It's next year and the year after. And again, if they're trying to eliminate Russia completely from the energy market, it'll be the next 2 years. So I don't think natural gas is done yet. Again, we just started hurricane season. There's still a chance for disruptions, as well as if it's colder than what the average is. And remember, you guys know what weather's like, right? The weathermen tend not to predict too much correctly, right? It's one of those jobs where it's definitely you're wrong more than you're right. Right now, it's both. They're using the 10-year average. We've had some unseasonably warm years the last couple of years. The average means that if it's been warmer than it's supposed to be, warmer than the average, that means we're kind of expecting a kind of spring in the other direction, which means this could be really cold and wet, which will mess things up. So I think there could be some movement there as well. So going across to the currencies, right? So honestly, we talked about it yesterday, and we're pretty much, here's where we were yesterday. We were basically in the exact same spot. What's the 24-hour pip change difference? One pip. Okay, and cruising back down again. So yesterday we talked about it. We had 2 days. We wanted to see it grind down. Now it did go up, and it did grab that 53.38. And again, late last night, a little bit of a hiccup, and then Europeans kind of got in over here. It was already moving. So all we did was rally back up, grab that same level that we had talked about before, and we pushed back down. And now we're kind of in closer proximity. Hold on. Kip's with me, obviously, if you didn't hear all the growling. Here you go. Get down. Go ahead. We're kind of back where we started. Now, yesterday we said, this isn't a really big push. It's about 60 pips in 2 days. That's not that big of a movement. So the fact that it's already gone up and have come back down again, it's kind of the same. We're kind of in the same spot. There was a trade there last night. It was an old level. We're still kind of looking, and we're kind of, if it's down here, this is definitely an if this then that. We're still looking for price to come down to the 63.73. But again, we have another hit up top. We know that, this has been hit a few times, but it was a decent runner. We know we have 2 levels up top. So now in the next 24 hours, we got 24 hours, one kind of daily ATR. It's what do we do with it? Are we going to go up or are we going to go down? How is the market going to pre-position for non-farm payroll? Meteorologists in the energy sector are expected to be right 70 to 80% of the time. The good ones are. Yeah, but how many bad ones are there, Jeff? Right? My assistant coach, Zach, his sister actually is a meteorologist, and he gives her a hard time all the time too, right? And it's not just meteorologists. It's just the like the Weather Channel. I use the radar all the time to see whether I'm going to cancel practice or not cancel practice, and it's wrong a lot. Even though the radar is supposed to tell you where it currently is, they have like the future prediction. Yeah, they're wrong most of the time. But yeah, you feel the pain. So anyway, same setup pretty much as yesterday. All we did was travel back up, turn and reverse, and right back down. We're in the same spot. 1 pip in 24 hours is what the overall movement was. Again, this makes you feel bad for swing traders. You got all this movement, and let's see. What was it? Whoops, hold on. 90 pips, right? 90 pips. 90 pips up, 90 pips down, and we're in the same exact spot. So this is one of those poor swing traders. Right, poor swing traders. But if you guys were grabbing this one late last night, nice little run. And again, we talked about the the way that this candle formation was with a one candle top, a kind of parabolic move up, a one candle top, and turn and roll back down again with the descending candles there, where we had a high and then a lower, and then a big push. Great formation. So it was a nice trade if anybody's able to grab it. Aussie. Aussie did basically the same thing. Now, the Aussie was a little bit shy. You can see that we kind of ruined all these. You can see we took a little bit of a hiccup off the 61, came back down to the 50, grabbed the buyers here, continued that pattern up, went through the 78.6. Now, this one, you could have marked it off. It was very, very similar. Unfortunately, this one just missed it. Just missed it. It hit at the same time at 11 o'clock last night. One of those ones that it's like, oh, look at that. Such a great position, one candle top. Yeah, it missed it by just a little bit. So, it happens. There's not much you can do about it. It happens. Right now, we talked about this trade yesterday being kind of an old level with some chop back and forth again. It's actually already kind of hit the zone, so this is just a continuation of it. I kind of like how, though, it dropped and started the base right on top of it, and it's trying, and actually came back and grabbed a small little level right here and drove its way down. So right now, with it basing, I would say, again, a little bit more bearish thinking. This lines up with what we're seeing in the Aussie dollar, having it come all the way back down. Again, yesterday we mentioned 92.68. Right, is where the target was. Right now, with coming down and basing, we're looking for this to prepare for tomorrow. That's also the Aussie weakness here. And again, they both had the same run up. Unfortunately, you wouldn't have triggered here. You did trigger with the Aussie dollar. But again, we mentioned this, and look, right, basing all on the top, grab some more sellers, and then boom, it drove it down again. It's like, oh, once these guys are gone, we should have a run back down. And this is about a 35, 36 pip runner, kind of breaking low. And again, we know we got buyers right below. So again, same trade from yesterday. We'll see if we get an actual kind of pull down base and pull back to get a little legitimate entry here. What are you doing? Where did you get that at? Where did you find that? Yeah, where did you get that from? I have no idea where you even found that. Was that under? he has like a little clamp, a spreader clamp, like for woodworking. A real tiny one. Well, I'm like, I have no idea where he got it from. Okay, Jim must have brought it up here. Lovely, lovely, lovely. What does he want? All right. Yeah. So again, I think 92.68 is where we're looking for. Euro pound. All right. So euro pound. Again, we talked about a push up again. Yesterday we were sitting right in here, right? And we got it. It ended up pushing up and going right back up to kind of, and I missed it by what? A little tiny bit, right? I drew the arrow to the point of the arrow. I missed it by 2.2 pips. So pretty close, right? Pretty close on that pullback. Again, we talked about that zone. We talked about the front run ahead of time for that news. It ended up that was the bottom. Okay, so it was a 1030, and if I extend this across, you can see that there you go. We ended up coming right outside of the top side of it. So, and again, this is perfect example. Again, sometimes if you go for the over aggressive, and again with the two levels, we typically take the farther one. We were talking about because it's news, trying to get something a little bit more aggressive in there, and again, news dropped it right in, but that zone ended up holding just fine. Right, it did not break out the bottom side, and came all the way up to the profit target before stumbling and rolling back down again. So, not a lot of movement. From where, here's the 10 o'clock candle. We're kind of right there. Again, it says 54 pips, but we know that's about to be eaten up pretty quickly. The 10 o'clock is this. Actually, I guess right here, it's 10:30. So in 30 minutes, that's going to get eaten up because of the size of that candle there. Where we are now with this one, again, we're seeing dollar strength roll in. This is kind of the trend we're seeing on everything. Again, all this dollar strength coming in prior to non-farm payroll, kind of making me think it's going to be a dollar short type based trade. Again, finding levels down here will be a little bit more challenging. And again, we're 24 hours ahead of time, so that makes it a little bit harder as well. Now, there's a few levels here. There's a hiccup here, hiccup here. There's a zone that we talked about down lower, and that may be where we look to kind of bounce off of. And this is 97.56. See. Yeah, that's probably where we're looking. I think there's two hiccups here. This is a tested level, and you can see it's sitting right behind the 50. So this kind of artificial 50, 61, 8 level, I would say this is a decent level. Now, it is about 65, 70 pips down there. See. What are we currently tracking at here? Oh, I hate when it does this. It makes them disappear, and then I put it back on, and I have two. See, I don't need the second one. 129. Whoops. 129. It's 160. It's 80. There's 144. Yeah, I think that 97.56 is going to be the area we look for. Um, Again, it has a 129 ATR right now on a daily. If you take from the European session, while I was measuring at this, I was looking for the 3 o'clock candle, which is right there. Okay. That puts us at about 150-ish right down here. That's a little past, right? It's a little past, but it's putting us right in the range where we look for reverse now. Again, this is a lot of dollar strength. Okay. The two ways to trade non-farm tomorrow morning is going to be, one, see what the Europeans do with it. And again, if they drive it up or down, typically is kind of a telltale sign of what we're going to get. But right now, with them driving it this far, if we can continue lower with dollar strength today, again, running into levels, what we may see is, let's see, 3 is right there. What we could potentially see is this come down. We could see it down, and then the European session send it up into whatever zone is formed. I have no idea where that zone is going to be formed, right? To there, and then see a major push straight down, right? We could see something along those lines. Because again, that gives us our full daily ATR down just a little bit past. European session sends it higher, showing dollar weakness beforehand, non-farm, and then we see strong dollar come in after that non-farm data number. I would say this is probably the scenario. As far as, let's see. Yeah, you can see when it was there, it was also it was bouncing right off the 50. It's going to be hard to play a pullback today. If you are short right now, which again, being short is fine. You know, these levels are broken. 97.56 is kind of where this one needs to go. Use this as a target. 97.56, actually, you know what? It needs to be a little bit before that. It's going to be right there. Okay, if you're a short 97.71, take your profit off there. And again, you can always re-enter if we go a little bit lower. Actually, this one is not straight. Yeah, I missed it by just a bit outside. 38 right there. Okay, so just a little bit higher, sorry. 97.73. Take your profit at 97.73. You're going to have buyers coming in. Gets a little bit risky. There is a potential bounce right below it. And again, this profit target also right before the 50% mark where there's going to be people stepping in. As far as an entry, I wouldn't go off the 50. There is a zone below that. Again, you don't like when it rides the top, but it barely pierced into it. That's probably where the bounce is. When we hit that one also matters. And like I said, this is marked right here for the European Open. If we can grind our way down, take your profit, you can even set, entries here. This zone is not really that big. It's only about 20 pips. Look to see what the Europeans do. Again, the Europeans will pre-position themselves for that NFP trade tomorrow morning. So I'm kind of looking at that, and maybe again the target would be down here around the 78, probably right down here the 96.45. Is kind of how I would map that one out. Is what I think is going to happen with the euro dollar. Now euro pound. So euro pound, we were talking about an entry on this when we were trying to go short out the bottom side. We talked about a near term. We kind of got it. It got to about a 1-to-1 and then kind of just stopped out. Probably stopped out at break even. You can see here we're down to, what was it? 1-to-2, 1-to-1, 1.98. So it ended up, we're basically just sideways. You can see it 2 pips in 24 hours. It's just no direction right now. Sideways trading. It did pull back up a little bit more, and again, did not hit a 23.6. We're right where we were yesterday. So, again, overall on this one, I think it is more of a pound, probably more pound favorable right now. I'd say probably a bit more bearish in this one. But you can see just with sideways movement, there's just no real true trend right now. Just not enough meat in this one. What I would do with euro pound right now is I probably wouldn't use this to trade in the next 24 hours. None of the zones are kind of acceptable right now to be able to say, yep, I'm taking that risk on a Friday. But in the European session, we can see what happens with this pair. See which one is stronger and which one is weaker in this euro pound. Remember, if this is going up, that means it's strong euro, weak pound. If we're trying to play strong dollars tomorrow, we would play the pound. The pound dollar. If this heads straight down, right, if we have this, that is showing us that it is euro weak, strong pound. And if we're playing strong dollar, then we're playing the euro dollar. Okay, so you're using the euro pound to kind of give us the better option to play with euro dollar, pound dollar. Okay, so I'd kind of, at this point, I probably wouldn't trade it. None of the zones here or anything that I'm in love with, but use it to give you a better option for the other one. All right, so yesterday, Euro yen. Yesterday morning, we were sitting right here, a little bit below. All it did was it pulled back a little, grabbed some of those things, and we continued down. We talked about yesterday having a profit target of 141.70. I still think that holds true. It's running into a little bit of a hiccup of sideways movement right now, but I can see it pushing just a bit lower down to the 141.70. Yeah, I'd say that this is probably where we're at. Again, this, with the yen involved, this is a proxy for tomorrow as well. If you want to play it, a little bit more risky to play because, again, you are playing the proxy with the yen. I'm actually kind of assuming we'll see some yen strength roll into the market tomorrow morning. So again, this is a target first, not necessarily a reversal, but in the European session, could we hit this one right here and run into this zone at that time? Sure, in which case it would be a European session buy. But I'd be very cautious being long this position. I mean, again, it is a proxy, so it is a little bit more challenging. There are other things out there that are better to play. But if we come down here, this could be a European open-based long tomorrow morning. So keep that on your radar. And again, the zone is formed by the bracket right here. It's well before the 50s, so there's no kind of interference. But it was a droppy base and a pop-up of it, and then it retested and popped. So 141.70 is what you're looking for. Pound dollar. Let's see, we got pound dollar wise. So pound dollar, we kind of drew this one yesterday. You can see that it kind of came up and it formed a base at around late last night. And then the 3 o'clock candle kind of came down. The 5:30 was actually the 3 o'clock is right here, kind of came back up. And now we've retraced all the way back down. And this is, it says minus 50, right? But we know right now the bottom of this one is 11 o'clock. The 10:30 candle is right here, right? So we're pretty close in proximity right now. You can see the 23, it kind of provided it. I don't know. It kind of went down and grabbed this level, so I'm not surprised by that one. I'm kind of looking for this to push all the way back down. And again, kind of like the euro dollar, we're seeing that the dollar strength roll in for the market today. We've kind of broken through this, and there's been enough basings here. My problem with going short on this one right now, and again, if you were going to use it, you could say, hey, listen, there's a zone right there. And you wouldn't be wrong. There is a zone right there. There is a bit of confirmation on there, and it kind of coincides with this, just more near term. The problem with it is, right now, I don't like this. There's kind of buying in here, right? There's been buying that was really, this whole area here has been kind of tested. Higher pop, came back down, retested higher again. So I do think we are getting to an area where we are going to see some buyers step into this one. Is it the best, highest quality form zone, at awesome times? No, right? And again, it's not just a one candle. It's kind of chopped back and forth. So we know there's already been buyers eating up in that area. Really, until we get back down here into the 110.50-ish range, I don't necessarily like it. And even this zone right here, you can see we do have a Harry Potter, a break of 110.28. Again, it was a zone that was originally formed, and we kind of pushed all the way through and broke it. I think there may be one more bounce off of this before it collapses, but I do think it has the ability to come all the way through. I'd like to see what this one does. Again, I'll mark this one off because it's the same kind of thinking. European session opens here. Depending on what happens at this line, if it starts to rally high, we're looking for shorts. And again, a couple ways you can do it. And again, if this helps you find the zones, great. From the high here, trail it down to wherever that open is, and look to see at the 23.6, is there some type of basing like this? Okay, this would be the telltale sign of, listen, we kind of want it to go up. We want it to go to the 23.6. We want it to get close before NFP tomorrow, and then go ahead and take that short. Okay, so that's kind of what I'm thinking on this one. And again, could you be short now? You could be. It wasn't, this is not a 23.6 pullback because, right here, that's where your 23.6 is. It was not a pullback. Now it looks awesome. Now you're like, look at that. It's a 23. Yes, now. But when the price was there, the 23.6 was all the way up here. So again, let's not candy coat this and be like, look at that. It's 20. No. That's where it was when the price actually touched that level because the low was right there. It did not hit. It was the supply zone that actually helped that one. Okay. So I would say do something similar tomorrow morning. Maybe we're here. I'm hoping we're down here a little bit longer, and we may actually be all the way down here, in which case this would actually, I would be okay with this, because if you have sellers here, look at this. if we come through and violate this zone and come down and bounce off this 110.56 or 57 as it pulls back up again, that's an old violated zone that used to be buyers, which would now be sellers if it comes down in bases. Kind of gives us a good target for tomorrow. But again, we're 24 hours in the way. This would need to rally down 145 pips. Absolutely can do it in a day. The ATR on this one right now is pretty insane. 209 pips. So we can absolutely move that in the next 24 hours. Okay. Well, I guess not 24. 18 hours? We can absolutely move, that far in 18 hours. Pound yen. Pound yen looks very, very similar. Again, this one comes down. You can see that it spent a lot of chop back and forth. And this is one of those ones a lot of people are like, oh, if you go short at the 50 and use the 61.88 as your stop loss, look at that. It worked out awesome. And yeah, you wouldn't be wrong, right? But understand that means you were taking risk of about 37 pips, which is, again, kind of a lot, right? But we talked about it yesterday, finding that kind of near term. We were sitting right here. We're like, oh, let's see if there's there. It ended up going up, and it was a decent top. You can see it ran into issues right at 164.40, and it hit it, came back, hit it again, and then finally collapsed. If anything, your trade should have been sitting right there, right here. There's your established base. You pull down base, and again, that Harry Potter pattern, right? You break through the zone, you base, you pull back up to it, and that's where your short is. So right now, right now we're basically in the same place that we were yesterday. You can see it's 61 different in 24 hours. I keep clicking on that one. I don't need that and that. But this is what we're running into. This entire area here, right? And it's a big area, right? Again, are there buyers here? Absolutely. Zone put in here, and it got touched. The next level up, touched. Next level up to here, touched. And that's what we're kind of smashing into right now. So it's something we got to chop through. If we're able to break through and kind of on the grand scheme of things, we do have a pop in here. I do kind of like, what are you doing? I do think that we probably have a little bit of a hiccup right here. I do think we get down to 160 though. We're 250 pips off of it right now. I think with non-farm tomorrow, I think we're going to get enough of a move, and I do think we kind of accelerate down. The question is, how much of a resistance is this going to bring up, and then are we able to come down and tag? So if I had to pick two targets, my first one is at 160.92, and then my second target on this one, this would be TP1, and TP2 is down at 160. And I think at 160, we do probably run into something there to make this one a little bit more difficult. Dollar CAD. So dollar CAD driving. Now, dollar CAD, we talked about a confirmation. It kind of got front run here and then pushed forward. Unfortunately, with that kind of sanction news and everything with the data today, it is sending it higher. Again, not much we can do with this one. The data right now this morning is kind of like, oh, look at this, right? This is, good for the dollar. Employment change, people are getting hired back, right? This is showing us that we're not kind of going to that recession. Maybe things will change a little bit. Sorry, here. It's red data, mean less people are working, right? Less people working means less demand on oil, even though oil is kind of going up. Not great. We're seeing that weakness come in. Okay, so right now we know we really don't have a lot until the 78. This was kind of our one hope, right? And it kind of when the turn here happened, it's like, it's probably going to break. It's too close, and it did. It's broken now. So we could look for a bounce back and a continuation push higher. We know we really don't have a whole lot coming in, probably until this area up top again. I do think there is space, and again, this is kind of going with that in kind of preparation. We do need to see a base and a pullback on this one, but you can see the 1 to 3 target is only right there. It's really before. It's before the 78.6. It's kind of before. Right there's where we're looking to take profit. Oh, I was so close on this one. 62.3 right there. You can see it literally borders the backside of our 1 to 3. So again, any type of base and a pullback, this one could be a nice little long target. And again, once it gets to 78, we're going to kind of blow it up anyway. So yeah, it's a shame that this one really kind of did this early morning. With that pullback, it's kind of like, we just go a little bit further, and it did. You can see it pull down, but it ran into sellers a little bit early, unfortunately. It would have been, that actually wouldn't have been a bad one. That would have been what? 55 pips down to that base, but the entry just didn't click in. So, and we actually were looking for 137 flat. It didn't make it, unfortunately. So it was close. Was long overnight. Let's see. Was long at 35.80 overnight. A quality entry or careless. 35.80. Let's see. You said 30. What is it? 35.80. Let's see. Whoops, one too many. It's like, why does that look weird? Yeah, you could have done that one. I mean, there's a zone there. I mean, we had it drawn here. Look, right? I mean, it was drawn. It was a violated zone that, again, Harry Pottered, right? You should have been long. I mean, really, you should have been long yesterday morning. Now, was it a little bit risky taking it a second time? Yeah, it was. You know, typically we don't want to take these a second time when they are a prior break, just because, again, they kind of needed that old is new kind of thing. Now, it didn't go very far into it, so that was okay. You were a little bit on the opposite, you know, a little bit on the higher side. But yeah, I mean, it's fine. Yeah, I mean, you were obviously shooting for the 61.8, so yeah. I mean, the question is if you took the 61.8, you had to take about 15, 16 pips worth of heat on that one. I don't know where your stop loss was. So, but that's where your stop loss kind of should have been. So, yeah, not bad. Yeah. So, yeah, fine trade now. But yeah, I mean, you can see there's a couple things overlapping here. But yeah, it was a prior zone, and again, it was a long entry from yesterday morning. So, yeah. Whoop. Delete that. Delete this. But again, you had it up here. You could have taken it down here too. You could have got in it. You could have got in it 10 pips sooner. So you were a little bit deep. Dollar Swiss. So funny enough, it literally went right back down in the same area and then reversed. So this is what we're talking about. And actually yesterday we talked about this 98.68. Very interesting setup right now, right? We've had some testing. We've touched it before. It is a 61.8. This is the level we drew from yesterday saying, yeah, we're going to have problems going through here. And yesterday morning at 10 o'clock, we touched it, and that was the kind of the top. So the question is now, is it going to be viable? And it looks like it's just trying to slice through it. And this is the problem. I mean, this is a lot of movement. This is the European Open. It's 115 pips straight up. This is where it's going to turn. But I would look for a fire kind of was like one of the these tops, right? Or a top like that, or bottom like this, right? It goes down, and then when it comes down, it can't go again. That's where you pull the trigger. I think we're probably due. It is 10:30. If this one turns and reverses right now, it would really make sense. And again, this is going to go against kind of what we're looking for the dollar. And I'm going to draw it. I'm going to put it right there because again, I would say not quite there yet. And a way to handle this one, and again, different people know how to get into order entries. If you're going to watch it, wait for a color change. Wait for the red. Wait for a red, green, red. Wait for that pattern, right? Obviously not this big. We can see it on a lower, like go down to a 5-minute or 15-minute. Look for red, green, and then red. And when we get the red, green, red where the green doesn't cap over the red, that's confirmation that it's flipped. So I think there's a trade here. I think there'll be some profit taking come in. I like the fact that it's 10:30. There are sellers there, right? It has hit, so it's not 100% fresh, but there are definitely some selling people in there. And there's already been one little pullback off the 61.8. Any stop losses in here, we should see it kind of turn and roll. And it should. Problem is the Swiss going to have enough juice to kind of overtake it. They're talking about it now too. Despite disappointing EU data went up to 89. So they're talking about it too, about the euro dollar turning and rolling. So yeah, it looks like, who is this? Moneta Markets. I don't know who that is, but yeah. So they have the same sentiment that I do. So yeah, I look for this to turn and roll. And again, obviously don't short it now. If anything, wait for it to come out the other end, right? You can set the correct order entry to, if it does close below, great. Or you could wait for the confirmation entry, right? So a couple of different ways. This would be a number 3 entry or a confirmation entry to the downside. Okay. Yeah. Dollar yen. So look at that. Magically, we're right at the 145 again, right? Yeah, buddy. Same spot. Again, we know that this has been a magnet. We need something to move. We need some type of help on this one. Non-farm probably do it, but I understand this is a proxy. A strong dollar is also going to be the news we can get tomorrow, which would kind of push us towards strong dollar, which would also collapse the markets, which would give us some yen strength. So kind of a harder one to play, but we're still channeling sideways, right? We're still going like this, right? 0 pips in 24 hours. Oh, sorry, 5. 5. We're at 5. It's blazing now. Rocking. Right? 6. Yeah, so not, yeah. Still sideways movement. Still nothing really tradable. And actually, this one's range has been so limited. Even from yesterday, we're talking about a 38 pip range. So not really much you can trade with that one, guys. Kind of hoping, I would like to see a pop in this one. He's everywhere. If we can get a pop up to this 145.57, I'd say that that's probably a decent area to go short. Right? 145.57. I don't know if we can get up there. We got a couple sellings right above 145. We got sellers coming in at 145.26. If we get any type of pop tomorrow, I would say look for turn and roll. But right now, it's not really a tradable asset. Cryptos, you can see cryptos also basing sideways, although starting to push back down again. Bitcoin under 20,000 shows us that they look like the dollar is going to get some more strength again. And again, you can use crypto as a way to kind of look at it as well. Again, the big money is, again, the more they raise the interest rates, the more reason there's no reason to hold this. Everybody's calling for a dollar crash, but the Fed, who controls the price of the dollar, is not talking about, one, said we're seeing no signs of slowing down, and two, hold on, no one said anything about cutting rates next year in 2023. So I'm not sure where the crash, I don't see a crash of the dollar, I see a crash of the stock market. So, yeah, I don't know. Not quite the time. Again, you're seeing the kind of similar patterns in all of them. Right. And again, after this big push, I'd say Doji coming back down to 6 tomorrow as well. All right, let's go to crude oil. So crude oil yesterday on the small time frame, it really, again, here, I'm going to drop down to 5 minute. It really was nothing. You can see that we kind of bounced off both sides. The oil inventory report really did nothing. And we kind of creeped above that top limit and then did what? Like if I move this up, because eventually it did push higher at 1050, all we did was kind of run along the top side of it. So I would say right now with oil, oil's still on the high side. We're definitely high on the curve. I can extend this up just by a little bit. All it is being grindy. I would say that the level down here may be something that we're looking for. You can see all the basing in there. We're going to remove it just to kind of keep it clean. I don't really like any of these tops here. Actually, I can pull this one off because it's now officially past the 78. 98.15. Yeah, we're playing with this right now. We're playing with this level of basing, but it did push it pretty deep. So these are kind of the two levels we're looking at. That's kind of what we're looking at. So I think oil has the ability to go a little bit higher. Now, most of the OPEC news is already baked in. I think if we can get a decent top, and again, not a decent top candle, not really a decent top candle, definitely not a decent top candle. When we get a decent top candle, and again, maybe it's, I like the 89, 85 better, but there's going to be something, there's going to be a group here as well. And here, maybe we'll change that orange just to say that, hey, listen, this is, there's a level at 88, 82. If we get a decent topping candle, like the candle shape, I think there could be a sell out of this one, out of the 88, 82. But I like the 89, 85 better. So, yeah, I think we're due for a pullback in oil just a little bit, And again, non-farm could do it. If the non-farm data tomorrow was absolutely horrible, we could get it. All right. The scary thing is, though, right? And I think the scary thing about tomorrow is if we get horrible data in non-farm, with everything that the Fed is saying right now, we're seeing absolutely no signs. They've already seen the non-farm data. They already know what it is. If they're saying they've seen absolutely no top yet, that means they're not slowing down, even if the non-farm payroll data is horrible, which means we're going to a recession, and they're still saying that, hey, listen, we're going to keep our foot down on the trigger or on the pedal. So I think there's a top. I'm going to say I think there's a top in here somewhere. I think we look for a short in the next 24 hours in crude oil. Natural gas, you can see we just popped up and grabbed this level. It was not really part of the 23. The 23 would be here, and you can see we kind of hit it and based. It didn't hold. It came up and grabbed this old level. And again, is it the cleanest level? 1, 2, and this is kind of 3. Not really, but it's already been a trade in the past. If anything, I would have shrunk the risk on this one just a little bit down to there. And you can see the 1 to 3 is sitting right there. Now we're halfway through, so you're not trading it right now, which I think is fine. Here is the one trade setup we mentioned yesterday, and yesterday we were sitting right here. We did nothing. We drove sideways. We're still looking for a break of 667 with a push down to 6.4, really 44, right? 644 is what we're looking for. So it's nice that yesterday at 8, it popped its head through. Not an entry for us. So again, we just put this one on. Actually, we put it on yesterday morning, so it's here. So still waiting for that. All right. So we'll see. So 2 little setups there. This is the one we're really looking for. This is just one that, again, you could have obviously traded it. Actually, it should have been off of that level there. So yeah, it's fine. The 1 to 3 there. That was we'll take the one off. It's already over. So, yep. Gold. All right. So gold. Did we hit? No. So close. So close. So yesterday was the bottom. It rallied all the way back up. The Europeans, look how close that missed. That's a 330 candle. So 3 cent. Look at that. So close. I don't know if you guys can see it. I wish you could make the candles bigger. Can you guys see that? So close. Yeah. So mentioned it yesterday. Whenever this thing pulls up looking for buying opportunity, we're going to get short. So maybe based off your broker you got in. Obviously here, it did not work. It missed by the smallest of margins, and it is pushing down. So I think in the next 12-ish hours, it's very important to see where this one goes. We're obviously looking for any type of rally we can get in gold right now for tomorrow morning. Now, if we just head straight down on this one, it's gold, 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 gold. I think all the statements are definitely, bearish gold type position. I'd like to see a pullback. This one, kind of the same thing that, I said with crude oil and natural gas yesterday. Any pop we want to get short. I think any buying, any rally in this one, we look for levels to get short. And I think tomorrow's the same thing. Could non-farm payroll be a big spike straight up for this one? I think it could be. I think if the non-farm data is horrible tomorrow, I think this one is a big pop. I think this one goes like this tomorrow in a big green candle. Do I think it changes absolutely anything? No. But I feel like the market's perception is if non-farm payroll is horrible tomorrow, that they think that the Fed is going to pull back. My personal opinion is the Fed is not holding back. I don't care how horrible non-farm is, they're not pausing. Literally 2 people this morning told you they're not going to pause. But will everybody look at that news and be like, yup, look at this? No. My wholehearted opinion is if non-farm payroll is big, look for this thing to spike and jump through the roof. And then what we should be looking to do tomorrow is take this back down again, wherever it stops. I don't have any idea where it's going to stop. I'm just drawing that right there in this example. If non-farm comes in and is horrible and we see a gigantic spike up, look for that top because the Fed's going to be like, this is a data point, guys. It's starting to work, but we're not peak. Inflation is not peaked yet. If we do nothing now, it's going to get worse. And then it rolls right back down. So for me, for gold tomorrow, I'm looking for a pop, and I want to sell after the news is out, if that makes sense. Silver, kind of the same thing. So silver, again, we were looking for this to push down. It did tag 20. Yesterday morning, we were sitting right here, right? We had kind of pulled back a little bit. I still think this one comes down, right? I still think we push lower. And I think actually yesterday we had kind of a Harry Potter drawn there. Yeah, we had 2 levels drawn. Whoops, I'll delete it just to kind of get the confusion out. But I think right now, I think this is what we're looking for, right? But same thing, horrible non-farm news. I think this sucker spikes. Maybe it's here, right? Where is the 830 mark? Right there. Would not be surprised if this happens tomorrow, right? Would not be surprised if that happens. And then we look for a parabolic retracement back to the downside. Okay. All right. Let's see. Twitter. Still holding firm. Apple, by the way, I told you guys yesterday there was a great little options position in Apple. There's your 143 hit. All the way up to, 145, 146. So, yeah. So, if any of you guys were traditional options traders yesterday, told you. Told you. So, nice little run up in Apple. Nice little option position, right? And then again, Tesla. again, took a bounce, came back, and then did the exact same thing. Opened here, dropped, came right back, dropped. So I think Tesla, Twitter, both are more in the red. Again, people, whoa, buddy, you're pulling the headphone out. I think those both stay red. Let's see what we got here. VIX is spiking a little bit. Yeah, I think Kashkari's statements there is like, what? You've seen zero signs? Yeah, I think that's kind of a problem. And dollar starting to top out, which kind of what we expected. So let's see what we got today. All right, so we pulled down. It was not into a level. The 930 was a green candle, so there was obviously a level sitting right there. Okay, this one would have triggered probably like 915. I'm sorry, not 915. 930, 940. So this one wouldn't. You could have taken a short off of this one. It drove it right in. Let's see what we got here. Yeah, I can tell you this one's already passed. Right there. Yeah, so it was well before. So yeah, so you're good on this one. It took about 5 minutes, probably five. Let's see. See how long it actually took. 940. So I was close. It wasn't 945. It was 940. So it took 10 minutes to get up there. Again, we were not really at a level that we were, we were just kind of sitting right here. Again, we were having the pullback, so it's kind of like, oh yeah, go long. But it wasn't on a level. All I did was drive it into that kind of top from the overnight. All right, and drop down again. So 1 for 1 there. This one also similar. I mean, there's no real tested level. I guess there's a small level here. That's 830, and then this drove it down at 930. So yeah, actually this one you could have taken. I mean, there's a level there that you arguably could have said, hey, listen, it drove it down and there was a level. ES did not really have that, right? It was only here. The level was much lower, so it would not have been an entry there. NQ actually did have a pretty well-defined level in there. And again, 915 touched it, so yeah. This one you could have gone long, and actually this one has a long and a short. Right? You have a long and a short on NQ. You could have taken either direction. And I can tell you both of them, like, you can see this one is obviously well past. You could have taken a long or short on this one. So yeah, you could have taken this one either direction. I mean, this you were out basically immediately, and then vice versa. Your 1 to 3 is right there. So you can see how much extra space there was, right? How much extra space there was either way. I don't know. This is actually not a bad place to roll. Let's see. You're seeing menus pop up because Kip was on my lap and kicking things. Yeah, look at that. That's actually interesting level to hit at 10:30. Yeah, because you got the 50%, the halfway back people in there trading. I mean, this is an easy draw, right? Low to high. People see this and like, oh, 50%. Oh, look at that. There's a buyer in there. It's actually not a bad little level. So there actually could be something in NQ right now. And you may say, why the heck would you go long? Well, there's people getting in there. And it is 10:30. Now's the time for profit taking. So they've kind of whipsawed people back and forth at this point, right? I mean, talk about being ugly, right? Oh, God, look at this. We're going to go short, right? Oh, God, we're going long. That's it. It's going to be a good day. Right back down again. You're like, all right, never mind, short. And we come back up and we're in the same spot. So, yeah, it kind of sucks. All right, so YM. Let's see, the 930 was down. This one did actually have a base too. This was actually a confirmed base, but I don't think, yeah, it did. Right there, 930, right? You could have taken this one in either direction as well. You had your confirmed levels up here. Let's see, would you have gotten into the confirmed level? Yep. So, same thing. This would have been close. Let's see. This one may not have hit a full profit target, right? It triggered. There's 2 and 3.5 is right there. It did. It made it. It was close. It was close. Look at that. This is 3.05 and it actually did go past. So it was close. So again, very, very similar to ES. You had 2 different setups, whether you took the top or the bottom. Again, typically you want to go with it if there's a level, and there was. But anybody, stop. No. No. What? Yeah, lovely. I would say look for a reversal here. No, you're doing it because you think you're funny. No, stop. I'm going to flip you this way so you can't see it anymore. I'd say look for 30,000. Obviously, we're only 45 pips above, or 45 points above it. Look for any type of basing in here. That could be a place for it to turn and roll back up again. Although it is in the worst scenario, or it's in the worst shape of everybody at 0.89. Actually, it's not. I guess ES is a little bit worse. I'd be surprised if today was as horrible. I would assume today's not going to be as bad as what we've seen lately. Now, again, a lot of this positioning for tomorrow. But I will say right now, the way that the market seems to be reacting, if non-farm is horrible tomorrow, I would trade this very similar to gold. If non-farm is horrible tomorrow morning, look for a spike up in this one and then be looking to sell it, right? Again, I don't know what non-farm is going to be. I don't have access to that early data. But if we see a spike because of non-farm, look for it to tag one of these levels and look to go short tomorrow morning. So you would have been on it there. And then Russell, kind of the same thing. I mean, Russell's is pretty easy. Went all the way back up to the top. There's your level. There's your piece. Again, there's your base. There's your confirmation in this green candle. Right? There's your base. There's your confirmation. There's your 930 candle right there. Right there. So you can see it blew it out. And then what did it do? Went to extreme with some tests, then turned and rolled back down again. So this is one of those ones that's like, yep, go long. Yes. Oh, God. And then it goes short. And they're kind of coming back and forth. And you can see the people that would have got in this one too at the 23 and be like, yeah. And now they're not loving it as much. So let's see. How much room do we got on this one? Another 14. We may actually, this one may actually hiccup off of this right in here, this little area. Problem is it's got this and this and this. So there's 3. I don't know. I hate to say that it's coming down to 1721 because that's a pretty nasty day, but let's see. Natural cash flow from, yeah. There you go. Yeah, it's going to be an interesting morning. I think it's and again, you can see everything is really starting to move now, right? You're seeing that yen strength kind of kicking over here. You're seeing the flat line over here. Dollar CAD's holding firm, and you're seeing some dollar strength start to build over here. Remember before they were all reversing? There was 2 and 2. Now it's straight red, straight red, straight green, straight green, straight green. They're all resuming their trends again. So, yeah, kind of interesting morning. So, yeah, so anyway, for opening prints, it looks like all 4 would have had setup. Some of them had doubles, tops, and bottoms in there that you could have taken advantage of. So, great morning for industry traders out there, whether you were trading futures or options. None of the futures positions would have got stopped out this morning. So, another good morning for that. A lot of this near-term stuff in the morning. Again, commodities, Commodities are doing their thing. Look at this. You can see, we drew natural gas talking about being down. Look how close it got. It made it to a 1 to 2.8 before reversing. So the 1 to 3 is sitting right there. We'll see if we can kind of come back down and bring that one to fruition. And again, gold is, we like this kind of grind. It looks like they are both lining up for tomorrow morning. So yeah, anyway, like I said, the important things you need to watch in the next 24 hours. Look, you got to understand what happens from now till the European Open at 3 a.m. And then obviously you don't have to be up at 3 o'clock. You can see what happens from the 3 a.m. to the 8. You got to be looking at charts tomorrow morning at 8 o'clock. The news release obviously comes out at 8:30. There will be increased volatility. So again, if you are seeing things, if you are awake at 3, there's not going to be as much volatility stacked into options. But things like Nadex will probably be insane tomorrow. So it's probably not going to be tradable at Nadex. Again, it is what it is. They've kind of lost control of their risk on a lot of these. The bid-ask spreads are just absolutely insane and not tradable. Maybe you get lucky and there's something in there, but again, if you understand traditional options will be a better play on it tomorrow. So, all right. With that said, let's do the drawing real quick. We're a little bit late. I got to go bring the boys. Lunches to school. Is Ernest not here today? Really? Ernest spends all those pip chips yesterday, and then he may not be here today. He tries to do this I'm going to get in last thing, but then I got to wait for him. Otherwise, it's kind of like, no Sean today. Stop hitting the button. Come on, stop. Here, you want this? What's this? What's this? All right. I guess he's not here today. So, all right. Let's close it down. So, it looks like we will have a fresh winner today. Right? It looks like we will have a fresh winner today. What are we in here? Get Debbie. Look at Debbie going for 3. Wow. Debbie's feeling adventurous this morning. Right? No Will today either. Right? All right. Winner of today's drawing is Debbie. Look at this. Debbie's like, I can play with the big boys. Look at this. Look at this. What? You say hi? No, you say hi. Look at that. Debbie taking it today. Debbie's like, yeah, I need to pad my totals here a little bit. I need to increase. I need to start building. Right? Look at that. I know. Look at that. Debbie's playing the wild side. I mean, I feel like Debbie. I mean, do you have slots in Jersey? I feel like you could be. You know, today's a day to hit some slots. Right? If you got the luck, you got to go with the. You know, when the trend is there, Debbie, you trade the trend. If that luck is on your side, you need to take advantage of it, Debbie. Go big. Right? Just remember your friends in low places. Right? I always drive past the big game thing. It's like, oh, the lottery right now is $370 million. It's like, oh God. I was like, if I won that, you know, how many people I'd be like, hey, you're not going to expect this, but I'm going to make your day, you know? It's giving away a bunch of money. So anyway, with that said, I'm out of here, guys. I will see everybody tomorrow morning. Be very, very cautious. Again, non-farm will be coming in right before we get on. So again, we're going to be looking for a retracement, see what we can get at 9:30. And again, see what that market reaction looks like. 3 a.m. to 3 a.m. to 8 is extremely important tomorrow in the currencies. Make sure you look at it, take advantage of those trades. And with that, I'm out of here. You guys take care. Thank you for joining me. I'll see you tomorrow at 9 a.m. or 9:30 a.m. Take care.